start with new topic, liquidation. So liquidation, as how for firm we have dissolution, here liquidation, or it can be called as winding up. Say three important areas are there in this particular topic. Number one being SOA, statement of affairs. Then we have something to do with B list of contributaries. Number three, liquidator final state. Importance, weightage for examination, if you want to take it up, would mean first we will tell liquidator final statement is very important for exam point of view. Number two this, number three this. But order in which we need to take will be this way. Clear? So important would mean LFS is very important from exam point of view. Then B list of contributaries. These two equally important. LFS is very important for exam. But we are going to take it up in this order, that is SOA, B list and liquidator final state. So why first we need to take SOA? Because that is the way in which this process of liquidation will happen. First of all, what is SOA? Say when company is liquidated, as how we discussed in case of say partnership, when a firm is dissolved or say winded up, then we need to dispose all the assets and we need to dispose all the liabilities on piecemeal basis. Similarly, it will happen in case of liquidation also. Liquidation process is not as a simple job to be taken up, but what we are going to try is only a summary job. That's how we discussed in partnership. Here also we are going to do summary work only we are going to do. What is this SOA? When a company is liquidated, we will appoint a person, or sometimes court will appoint a person by name liquidator. He is a person who will take care of all the disposal of assets, settlement of liabilities, etc. Generally, since he is doing that work, he will be given some consideration that we used to call it as liquidator's remuneration. This person will be appointed for the purpose of realizing the assets and settlement of liabilities. For doing that work, he will be paid, we will call it as liquidator's remuneration. So even before appointing liquidator, say I am telling this way, tomorrow you please complete the homework and come to class. Here I am just making a statement. Tomorrow you please complete the homework and come to class. What is the next question you will ask? Say I am just making a statement. Tomorrow complete the homework and come to class. What is the homework first of all? You just tell me what is the homework. See, yesterday we gave homework, we have completed. Tomorrow complete the homework and come to class would mean first of all what is the homework you tell me. Then only we can try that problem and come to class. See, I am appointing you. Dispose the assets, dispose the liabilities would mean, first of all, who are you? What is your business? Why your company was liquidated? What are all the assets you are having? What are all the liabilities you are having? Without telling all these things, dispose assets, dispose liabilities would mean, then it will be like as if, like say in computer we used to tell white box approach, black box approach. Like that it will be like black box approach. Are you able to understand? It will be creating an impression as if we are in a dark room. When we are appointing a person as a liquidator to, and say when we are giving some responsibility to do all these things, that is a disposal of assets, settlement of liabilities, first of all we need to inform what are all the assets we are having, what are all the liabilities we are having, what is our company status, financial position, everything we need to inform him. Then only after understanding our problem, he will start his work one by one. Are you able to understand? Clear? You are coming for Shriram Coaching Point for registration. What is the first question you will be asking? Sir, give me your pamphlet. Give me your brochure. So we need present first of all our pamphlet or brochure, or somewhere you could have seen at least in the net or through your friends. After knowing only you can come to class and you can start attending your class. So the moment you are entering to our Shriram Coaching Point, we need to present something to you. Then only based on that you will start making decision. Similarly, when liquidator is coming to our organization for doing all these formalities, we should present him a statement which informs what is the position of your assets and liabilities. That statement is what we are going to call it as statement of affairs. Carefully understand. This statement of affairs is to be prepared even before appointment of liquidator. That means once company is liquidated, even before appointment of liquidator, we need to prepare this SOA. The moment liquidator is coming to our office, we need to hand over this statement to him. And he will scrutinize and he will go through all this information. Then he will start selling the assets and settling one by one the liabilities. By the time he will have one cash book. Why cash book? At the time of selling the assets, he will record all these inflows on one particular side. And as and when he makes payment, he will record it in outflows, payment side. First, we need to prepare SOA. Company's duty is to prepare SOA. After preparing SOA, it will be handed over to liquidator. Liquidator will open a cash book to record all the disposal of assets and settlement of liabilities. After disposal of all the assets and liabilities, it is not in this manner we need to present it to say court or the company, as the case may be. Finally, the summary statement. As per law or as per act, there is a particular format which is prescribed. Even for SOA, there is a format as per Companies Act. Similarly, for LFS also we have a specific format. Only based on that format, we need to give informations one by one. Even your CA institute, when you are filling the application form, first they are asking name, then date of birth, then father's name. Like that, they are having a particular format. Even though you can say write first for your name, then father's name, then nationality, then date of birth, then address, or first write the address, then date of birth. Anything you can write according to your own will and wish. But they have prescribed a format. Only in that format you need to fill that particular application form. Like that, LFS and SOA for which some format has been prescribed, that format you need to follow and you need to report. So the conclusion being, first we are going to prepare SOA and then we will hand over it to liquidator. That liquidator will prepare two things. Number one, cash book or receipts and payments account, which will give details about all the inflows and outflows. After completing all the formalities, finally he needs to prepare liquidator final statement. It is not account. Liquidator final statement. It is a summary statement which explains how you say inflows and outflows in a particular effective order is given in the act. That order in which you need to present the information. That is liquidator's final statement. Are you able to understand? So this is also a statement. This is also a statement. But cash book or receipts and payments, it is an account. This is account. This is also a statement. This is also a statement. Are you able to understand? That is why, even though LFS is important from exam point of view, first we are starting with SOA, because that is the first step in after liquidation process, then cash book, then finally we will prepare LFS. In partnership, we told there are some order for the settlement of liabilities. What is the order we told? First, realization expenditure, outsiders remuneration, partners loan, partners capital. We told some order. Like that, here also some order is given. For example, legal expenses, liquidators remuneration, liquidation expenses. Clear? Then creditors we can classify it into two: secured and unsecured. Secured itself we can classify it into two. Secured creditors having fixed charge, secured creditors having floating charge. The secured may be fully secured or partly secured. That itself we are classifying into two: secured creditors having fixed charge and floating charge. Unsecured we are classifying into two: preferential creditors, non-preferential creditors. If I am 100, say what is fixed charge, then what is floating charge means when charge is floating, it is floating charge. Say generally in case of, say for example, bank loan etc. or any other loan etc., they will ask for security. That security for a particular loan or any liability, if you are giving any security of a particular asset, say for this particular bank loan, I am giving my building or my say land as a security, would mean for particular liability, particular asset if it is given, specific asset if it is given, we can call it as secured creditors having fixed charge. This particular bank loan, if it is secured with say buildings, would mean we can call this bank loan as secured liability or secured creditors with fixed charge. What is this floating charge? Generally, no instruction given would mean debenture holders will have floating charge. Floating charge would mean not on a specific asset. They will have right on all the assets of the company. Are you able to understand? Anyhow, you need to make payment to them. That is the condition. It is not against building, they have a specific right. Against machinery, they have a right. Or against this particular asset, they have a right. We can't tell. They have an overall right against all the assets of the company. So against a specific asset, if you are having a right, we can call it as fixed charge. Against all the assets, overall, if you are having right, we can call it as floating charge. Are you able to understand? Preferential creditors. What is this preferential creditors? We will do something in a detailed manner about, say, preferential creditors later. But as of now, what is preferential creditor? Preferential creditors, that is unsecured preferential. Example, tax we need to pay to government, that is preferential. Salaries we need to pay to employees, that is preferential. So generally, what is due to workers or employees or government, excise duty payable, sales tax payable, this tax payable, that tax payable, all the tax payable to government or any remuneration outstanding for employees, salaries, wages, etc. Generally, it will be taken as preferential. Non-preferential, other liabilities, which is not preferential like government, say payment or say payments to employees like that. Other liabilities we used to call it as unsecured, non-preferential. Are you able to understand? See, why we made this classification would mean there is a small change at the time of making payment and at the time of presentation. Payment, presentation. Where this change will happen? Always, first priority, generally it will be given for secured creditors having fixed charge, rank number 1. Then, second preference should be given for unsecured preferential. First you need to make payment to unsecured preferential. Then floating. Fourth one, non-preferential. Clear? It is not 1, 2, 3, 4. It is 1, 3, 2, 4. And this is the manner in which we are going to present in SOA also. First, that is statement of affairs, what we are going to do. But there is a slight deviation when we prepare LFS. What is LFS? Liquidator's final statement. That is a summary statement after completion of all the formalities. First, you could have made payment to 1, 2, then only 3. But as a matter of presentation in LFS, they say first you need to write 3, then 2, then 4. 1 will not form part of LFS. 1 we will not write it in LFS first of all. It will be automatically adjusted. Are you able to understand? When we are preparing LFS, when we are making payment, it is 2, 3, 4. When you are presenting in S3, SOA, it is 2, 3, 4. But when we are presenting in LFS, it should be 3, 2, 4. Say we need to prepare SOA in this manner. We used to discuss this. All the order what we are going to take it up, that is given in the form of list. We are going to group each and everything. Clear? In the form of list. We used to call it as a list. A, B, C, D, then E, F, G, then H, I, J, K, L. What is A? A, list A. Remember this, assets which are not specifically pledged. Assets which are not specifically pledged. Assets which are not specifically pledged. What is B? Great. Assets which are specifically pledged or secured creditors having fixed charge. From asset point of view, it is pledged. Liabilities point of view, it is fixed charge. Are you able to understand? So list B contains both assets which are specifically pledged and secured creditors having fixed charge. List C. What is list C? What is the order of priority then? After fixed charge. Preferential creditors. Then D, floating charge. E, F, preference shareholders, equity shareholders. Sometimes they will ask, see, generally prepare statement of affairs would mean we need to prepare all the list A to G. Sometimes they will ask you to prepare deficiency statement. List H is deficiency. Say in partnership, in case if you are not able to make settlement to all the liabilities, then difference in that liability will transfer to deficiency. That means we are not able to settle. So if you are not able to settle, say E or F or G, it may result in deficiency or surplus also. Sometimes it is possible.